Thank you very much for joining us today. I'm Francisco Mariscal, Vice President of Angeles Ventures. If you don't know, Angeles Ventures is the fund of Angeles investors. We launched 1 year ago, and fast forward, we have onboarded more than 60 investors, some of them, like all of them, very prestigious. Bank of America, Talipod, also many here in the room, so thank you for trusting in us. Also, we have done 6 investments to date, 4 of them of which we are co-investors with angels, so a lot of synergies here. And in this panel, I will deep dive in a topic that I found very interesting: how the insights and experience of successful startups can offer invaluable lessons for angel investors. So exactly as Marcelo said, an inside perspective. We'll have a panel of 20, 30 minutes. First we'll do a round of intros. I have 2 or 3 topics to discuss with a set of questions, and I will finish with a session of Q&A. So to start, first of all, I have to say that I'm very excited about this panel, and especially because of the quality of founders that we have here. I think these founders are in the 5 or 1% of founders in the world. They have an incredible experience, and they want to pass their knowledge right now to all of you. And with that said, maybe we can start with a round of introductions. First, I want to welcome Orit. Orit is a serial entrepreneur and co-founder of Security. It's a cybertech startup specializing in AI-driven penetration testing for SaaS application. Correct me if I'm wrong, but Security is backed by Endeavor and Google for startups. Kudos to her. Yeah. And she brings a wealth of experience in technology and strategy. Orit, please so introduce, like 2-3 minutes, your experience, your journey.
So first and foremost, thank you for the opportunity to speak to such a crowd. I think it's the first time. I'm usually on the other side of these panels, and I'm listening to investors and what they're looking for. I'm very excited. I think this is a very creative way to have feedback the other way around. And so yeah, I'm a CEO and founder of Securely. It's a relatively new startup. We've been in business for 2 years, and it's a AI-driven cybersecurity platform for SaaS, which is software as a service. We have companies such as fintechs, health tech, HR tech. Also, most recently, the government of Chile, the Department of Health. Yes, it's one of our customers, and it's a great opportunity for our angels, and for you as angels to hear our so far milestones were generated really by the power of our amazing angels that we have acquired. Thank you.
Thank you. For sure, your insights will be invaluable to angels. The next one that I want to introduce is Eyal Schatz. Eyal is the co-founder of SimpleRoute, a supply chain startup that optimizes delivery routes for business. They have raised more than $10 million with investors such as Venture City, 500 Global, Right Side Capital. But most important for me is that they have successfully scaled revenue in the US, Argentina, Chile, Uruguay, Mexico, Peru, maybe Colombia. You can talk more about that. And following that entrepreneurial success, he also launched his venture fund to pay it forward to founders. So Eyal, please feel free to introduce and what drives you today.
Great. Thanks for the invitation. Amazing place, amazing people. So we've been doing networking. So early in the morning, I would stay later so we can keep on chatting and talking. Mike.
Yes.
No, you have to turn it on.
Okay, now? Yeah. Perfect. So you can hear my accent as well. So
we all have accent.
And every talk I started with my accent. So everyone is thinking, well, is it Dutch or German? So I was born in Israel, lived in Chile, now live in Miami. So I have a combination of accents. So that's what you are hearing. So yes, we started SimpleRoute 9 years ago in Chile, and we did like the classic startup journey from Chile to LATAM. So we did Startup Chile, then we went to Silicon Valley, we did 500 Global, 500 startups. So we did a lot of incubators, a lot of accelerators, and then we start raising money, and we start opening office in different places from Chile, Uruguay, Peru, Colombia. So we just did like a south to north, open Mexico, and then Brazil, and then Central America. So you can imagine each one of the steps, how complicated and how interesting it is. And 2 weeks ago, we opened again like a US operation. So now we are selling here. And we are really like interesting stages, like between Series B, Series C, exit, NMA, buying company, selling. So there's a lot of going on. And yes, and like I was in so many incubators and accelerators and always like giving back, staying and doing mentoring. And I found that I really, really like it. So I start investing as an angel as well, and then in different funds as LP. And after that, I said, okay, I already did all the journey, and I'm still founder in my startup, but I want to do something else, and I started my own venture capital. So it's all over the place, right? But really trying to do like founder to founder fund, like taking all the experience from my journeys as a founder and giving back, but also be able to choose, and that's what we're talking today, right? Choose and help the early stage founders.
Great, that's great. Really impressive career, really impressive journey of Simply Road. So your insights will be also very, very valuable to angels. So, and the last that I want to welcome is Felipe Sommer. Felipe is a seasoned entrepreneur, advisor, and investor focused on education and technology. He co-founded Nearpod, an edtech startup that revolutionized interactive learning. He raised more than $60 million from notable investors such as Insight Partners, built a recognized brand, scaled revenue, and achieved a multi-million-dollar acquisition in 2021. So, Felipe, it's an honor to have you here. Please introduce yourself, share a little bit about your journey, what you have learned, and what inspires you today. I think it's really impressive.
Hello, everybody. Felipe here. So let's see. Nearpod is this company that we started around 2011, 2012, from a technology that we had developed, and that turned into a very interesting concept. It was an amazing time to disrupt education. At the time, there was mobile devices going to classrooms, and tablets and Chromebooks and connectivity and digital books. So we had this piece of technology and we said, wow, this could be amazing to disrupt the classroom and generate engagement, which we realize is the big issue in teaching. A lot of people here may be parents, right? So I have kids and I know what I need to teach my kids. The question is whether they are listening and they engage in the message or not. So building a technology that really allowed students to be engaged with the teacher was a winning proposition. It was an amazing journey. We studied with, personally, I was head of product first and then go to market and then sort of focus on operations and fundraising. So I pretty much did a bunch of things at Nearpod. From a funding journey, we studied with a few angels in Argentina that gave us some money to try a few things. Then we did impact fundraising from impact funds in California. Then we did a Series A with VCs, a Series B with private equity, and then we sold to a strategic. So, and we acquired a company called Vocabulary in the middle of the journey around 2019. So we went from, we basically covered most, we didn't take the company public. So that I still, for a different life, I'm not ready to doing that anymore. So, but we didn't take the company public, but everything else we sort of did. We also had an amazing journey as a founder because as we learned about what was going on in education, we changed sort of the buyer persona and the product. So at the beginning, it was a simple app for teachers, ended up being a platform for school administrators to understand what was going on, the level of engagement, learning outcomes. So it was an amazing journey. We sold to this strategic buyer, another edtech company in 2021. And since then, I need to put frameworks to my life. So I said, okay, I'm going to be ABA now, angel investor, board member, and advisor. And that's what I started doing. So I did a little bit of angel investing. I'm in a few boards, although not fun for me. Like, I find that when the company is doing really well, there's not much to add, and when it's going poorly, you need to work a lot. And I had to fire a CEO, and I had to fire another company. So, like, it's a lose-lose proposition for me. And I like to get involved, and in boards, it's like it's once a quarter. I don't know. Boring.
you're
So the B, I don't like anymore.
Entrepreneur,
boards.
dies an entrepreneur.
And see. Eh? And one thing that I started doing recently is I do a lot of coaching and mentoring of young entrepreneurs and young people, and I end up joining their companies, not so much as an angel, but what I call company building, right? It's a different role. It's a little bit more involved. It's more equity, but it's a type of investment that I find interesting. So that's a little bit about me.
Thank you, Felipe. Truly inspiring journey. And well, I'm very excited about the panelists and the backgrounds and the conversation ahead. So moving to the first topic of discussion, I want to deep dive in what makes an angel investor truly valuable for them. And Ori, probably you have had many experiences with angel investors. Probably there are some of them that are very, very good. Please tell us what are the top qualities of the best angel investors that you have.
Well, I'm one of those lucky founders that every single one of my angel investors are stars for us. I think if it wasn't for our angel investors, we wouldn't be here. And first and foremost, I want to say it's not only the money. Obviously, the money is where it comes, the fuel to grow the company and get it to the next level. But I think most of it, and what I looked on an angel investor, is if that person is somebody that I want to see at my Thanksgiving table, right? If that person is that has the same core values, I trust them, they trust me, then we're a good match. And that, I think I've been lucky like that to I'm a people's person, so I spot people, and I think they have backed me up with not only money, not only the investment, but the doors they open. For example, I have Alex Ionescu, who was part of CrowdStrike, which is a cybersecurity company, heavily invested, one of my major angel investors. Then I have Drew Danner, who has a consulting firm. He's the CEO and founder of that consulting firm that it's in the space of cybersecurity and compliance. And he's been incredible in the sense of growing the business, because that's the person I call and say, hey, I'm thinking about investing in this marketing strategy. How's your experience? Or can you come to a call with me? And he's like, sure, let's go. So I think your angel investor should be somebody that you call your friend, your fan, and the person who's gonna go bat for you. And I think for you guys, your founder should be somebody that you know you can sleep at night, and that person has a stake so much that they're gonna bat for you, no matter how much touches you do, because you don't want to give money and then have to have babysitting. Hey, where's the revenue? Are you meeting your goals? That's an awful situation for both the founder and the angel investor. I think the best situation is where, hey, I haven't heard from you. Oh yeah, that's because I'm so busy. We achieved these goals and we did that. That's why you haven't heard from me. And instead of you feeling anxious, where did I put my money? Knowing that that person has therefore, I think if I can give you one piece of advice, when I become an angel investor, I will invest in somebody that has that they're looking to succeed not only for themselves, but for other people under their belt. I'm a mom, like I have people depending on my success. I would like lift a car if I need to in order to succeed. And that's what my angels investor know about me. And I think that's how much I'm gonna put my trust into another person. It's easy, it's very easy to lose your money and to do it for the fame when you invest in somebody that's coming right out of Silicon Valley, that has the pedigree, and that doesn't guarantee your success. I think as an angel, what guarantees your success is if you know the drive of the person leading that company.
Completely agree, Orit. And with that, I will. Felipe,
No, the microphone.
okay, sorry. I want to complement that question to Eyal, but Eyal, can you share an example of an angel investor that you have and that who made a significant impact in your startup journey?
As I already said it also, so we can leave now. Complete. But yeah, for me, and I will give the example, for me, it's two main key points. It's the, I would like my angel investor to understand my business. And it's not the usual case. And maybe it's something different for us, but we try our angel investor to understand the business, because from my perspective, and when I invest, if I don't understand the business, and if I lose like track of what they are doing, it's really hard to help later. Yeah, and you can help like from the theory. We all read the same books, right? So yeah, I can come later and say, okay, you need to go to market and the standard stuff. But if the founder is good, he read the same book and he knows like the basics, right? But if Felipe already did like Series B, C, so I would love to have him invested in my company, right? You want to invest in company? So
Maybe on the record.
that's how we sell the founders, right? In the panel. So now I can call Felipe, okay, he invested, he's taking the game. So he can spend a little bit more time with me, and he can, okay, help me, okay, what is going on? Series B, Series C, M&A. It's really, you need someone with experience to help you. You need someone that lived the same thing that you're going to live. So it's really, really important. That's what we are looking for. And in the example, so we look like for someone from, I won't say the exact name, but from DHL, UPS, from the network. So he lives in the same space that I live, because I'm going to explain him, okay, I'm doing software for logistics, so I can deliver as Amazon. It's really nice speech, but it involves a lot of knowledge, right? So I want someone that understands what I'm doing.
Yeah, I would like to add something to it. For me, it's more about the investor knows who my product is gonna benefit. More than understand the tech, I want my investor to know who we're benefiting with the tech, because that's where the doors open, and that's where that's where the product market fit, like you were saying, comes in. I don't need help you understanding everything behind the scenes, but I want the investor to understand who we're targeting and who will benefit, if that makes sense.
Makes totally sense. And I want to pass the ball to Felipe to complement this. And I know that you have a very special framework of how to engage between angel investors and founders, and how to build long-standing relationships and investors. So,
Yeah. So what I was mentioning before is that over time I developed this way of relating to as an angel to investors, and I put that in a framework, which it's nothing so sophisticated. But basically, my routine is to meet people, then engage with them, track what they are doing, and eventually invest. At the beginning, I used to I don't invest anymore at first sight, like love at first sight. No, let's meet, let's hang out a few times. Let me see if you're doing what you said you were going to do. And then I'd rather invest more expensive later than at a discount blindly. So that's something that I learned. The other thing that I usually do is I start with I invest where I cannot, like everybody says, oh, we don't want dumb money, you want smart money. Okay, so not to be dumb money, you need to be able to add some value somewhere, right? So either is because you know the industry very well, or you have the management expertise, Like, for example, I'm now a partner with, or I invested in, the guy is 25 years old. Okay, I've been working for 40 years. Clearly, I have a lot of knowledge that is not related to AI, which is what the company is about. It's about making decisions and management, right? So I need to be able to add some value. So I usually start with the industry. I need to be related or feel that I can add some value in the industry. Then I look into the people, right? People is more important than product for me in the evaluation. The product might eventually change, and it has to change, right? So I think that in an early company, in an early stage company, the people is what I would value the most.
Yeah.
And then I have something that happened to me, and that's another sort of, I don't know if it's an advice, but it's my experience. You need to stay very close. When you invest money, stay close. Don't bug them too much, but just stay close to understand what's going on. The worst thing that could happen to an angel investor is that the entrepreneur pivots and suddenly you're out of that new business, even though it was similar to that, right? If you're close, that's not going to happen. But if you put, I don't know, $50,000, you don't talk to them for 3 years, then eventually they are doing something else. They say, oh, but it's a different company, and now you're not an angel in this company. And that really sucks. So I think that staying close is super important.
That's why building trust, right?
No, that's very, very good advice, and especially also of that trust. If all the community invest together through an angel group, it makes
It's
that
okay.
a little bit easier. I want to move to another topic. The second topic of discussion is from the founder's perspective. What is happening with their relationship with angels? What experience they have had by working with angels? So, Ori, I want to start with the question of how do you choose angel investors to partner, and how, like, if you have two offers of two different angel investors, how
Mhm.
do you choose which one to pick?
Yeah, that's a great question. I think I would always lead with trust. That investor that I trust to be my longtime partner. I think I look on an investor not only the money but the patience they have and what the long-term vision they have. Because as a founder, the worst part is to be having to pull P&Ls and numbers and projections. I'm like, I can do all that in the beginning, but then let's get to work, right? If you want to see how the company is doing, come to the office, see what we're doing. Let's engage in conversation. And by the way, I have reports that I once a year, every year we close the books, and then we send out a report or how we're tracking in terms of our goals, right? But I think the first and foremost thing it's trust, because I'm not gonna take money from somebody. That relationship, it's gonna be friction for me in order to grow the company. I have like the most I think valuable asset that a founder has. It's not money, it's time. So whatever suck up your time, it's the worst, right? The worst relationship. I have friends that I call only once a year, and they're my BFFs. I have investors that I contact once a year, and they're my greatest investor. But I know they're there when I pick up the phone and say, "Hey, I'm going to Chile. I'm gonna talk to the Department of Health. Can you come with me?" Right? So I think it's again the question is I pick based on
I love that approach.
I lead as a woman. I think gut instinct leads most of my relationships. And even when it sounds right, but it doesn't feel right, I don't go with it.
I love that approach. The let's work together.
Yeah.
Then let's ask for reporting every week, every month. No, let's work together
Right.
and let's do. That makes a ton of sense. I want to move a very similar question, but to Eyal. Like looking back, before that you accepted the first angel money, what do you wish to have known before working with angel investors before fundraising?
Good question. Right.
Today I have a different approach. So as because I'm investing and I have startup for many years. Today it's like I'm inviting you to be part of my journey, right? It's my journey, and it's approach. It's more founder approach. So sorry about And that's the idea, right? So this is amazing opportunity. Are you willing to join the ride, right? And hopefully I will ask you for help, and you will help me. It's not what I did at the beginning, because you're really early stage, and maybe you're going to die if you don't have the angel money, right? So you go like, please give me your money, right? So I think it's wrong approach. It's needed maybe, but it's wrong. I think it's okay. This is my journey. I'm all in, right? As Felipe said, this is really, I'm all in. So it's about people, relationships. So okay, we like each other. I think you can help me, but now it's my journey. Okay, are you willing to give me money, right? And maybe together we are going to build something really big. I'm going to put everything there, right?
Right.
I love that approach. I love that approach. And it's really a journey to make a startup grow from 0 to 100
Right.
with goes ups and downs. I was a founder before, and I saw the ups and downs, and that's why I decided to jump to the investor side. No, it's I will go back at some point, but like I agree with you, Eyal. And with that, I want to pass the ball to Felipe and complement all those two questions with when you see the angel investors investing, what do you think that is a big mistake that they do, or what they have to do differently?
So, I mean, first of all, it's really hard to get a return being an angel investor, right? I mean, most startups go south, right? So that's the first consideration. I think due diligence is super important, and some people don't do it. So that's a typical mistake. They see a deck and they buy every assumption, and they say, "Oh, we want to be millionaires," and I don't know. I think another mistake is whether they realize that they can add value or not to that opportunity, right? I mean, do I know about the industry? I mean, is the founder somebody who I can relate to, and he or she will value my experiences so I can give them advice? Do I know, I don't know, attorneys, accountants, consultants that I can introduce, that I can make an impact? And the last thing is some angels don't have a portfolio approach, right? They either invest a lot of money, and I did that by mistake. I was investing, I don't know, 25 to 50 per deal, and then I invested in a company 250. It doesn't matter whether I haven't lost any of this money yet, but it's not going well. But even if it goes well, I think it's the wrong approach. I think that you need to have a portfolio in terms of ticket size, in terms of the type of industries, to see if there is complementarity between companies. So the portfolio approach, I think, is super important.
That's for an angel investor, that's super important. It's like, hey, let's invest in one startup per quarter, or a startup per year. In 4 years, I will have a portfolio. Instead of one shot, you lose the money, and then you will not want to invest anymore.
The numbers game.
It's a numbers game. And to the other point of Felipe, the due diligence, at least I followed the advice of David, the traction, the month-over-month grow, track them, see if they are growing, how they grew when they present the tech. It's not about only the names and the assumptions and the nice decks.
Right.
It's one step further.
They deliver, right?
Deliver.
More than the pedigree. Yeah.
Exactly. And with that was a really great conversation. I want to open to a Q&A. I see Felipe Novoa that has a question there. And Jorge.
Tocayo, sí. His name is Felipe, by the way. Yeah.
How do you say tocayo in English? Yeah.
Nice. Thank you.
So, tocayo, nowadays that is no 2021, if you have two founders, and let's say both of them are experienced founders, not first-time founders, would you choose the founder who is aiming to a moonshot and becoming a unicorn, but with
Great question.
higher risk? Or would you choose the founder who has a clear path to do an exit in less than 3 or 5 years, but less upside?
Good. Thank you, Felipe. I need to ask you a question before I can answer. How does my portfolio look? Right? Because if I have a number of bets on moonshots, maybe I want somebody that is gonna make
Yeah,
it.
let's say it's balanced. I mean, and you have one ticket,
Okay.
right? And you have Both founders.
Putting you on the spot.
I think she wants to answer that question. Now, again, it's very personal, right? It's very personal, and you say my portfolio is balanced, but I mean, that might be the right piece of information or not. Usually, the issue that I started having with as a founder, and I'm going to answer the question, but I want to qualify something first. As a founder, the issue that I had with VCs is that I had a portfolio of one. This is my company. And they had a lot of companies, and they go invest, go fast. No. This is my only opportunity, at least for the time being. So actually, sometimes we don't have the same alignments with venture capital. At my age, with my experience, I would go not for the moonshot. I would go just for, I don't know that I like it so binary, right? 1 or 0. I'd rather go with somebody in a journey that can deliver results.
Let me complement, and
Yes.
maybe the room has more experience. It's really, really hard to get a startup that will say in 3 years, I'm going to do an exit of 10x. It's really hard to get a startup. And because if you have those hypotheses and you have the clear path, why do you need money, right? Why do you need venture capital money? So the like on-off question is tricky, right? I think you need to aim for the vision unicorn, and you can get in the way a good startup and not getting a unicorn, right? But getting a good exit. So then you have both, right? If you are the startup today, you want to invest, and you are convinced they're going to do exit in 3 years, get 10x, 20x in 3 years, go for it, right? But it's really hard to get.
So one for the moonshot and one for the
No, I think we both said it.
two tickets.
I'm gonna give you also my 2 cents in that thought. So to invest on a moonshot, I think paper holds everything. I can give you my company for a moonshot. I'm definitely aiming for the moonshot. But I think it would be more impressive for you to know how I would make it to the next level without pointing to the moonshot from the beginning, because that's, projections are dreams, really. Nobody's going to tell you that, but the reality of things, you can project all you want, how you get to 100 million. You would only know it once you start walking towards it, right? So I think from the investor side, you want to see that the founder has the ability to do both. And hey, yeah, you want to invest in the moonshot, but you want to know how is it, how they're going to go from A to B on a safe bet.
I have 17 questions. No, I'm just kidding. Only a couple. So, Ori, I heard that you were part of Endeavor in Chile.
And they were Miami.
Miami. Oh,
Go for
okay.
Chile.
You're from Chile. Okay.
Miami.
We are in the
Well, so my question was, how valuable are incubators or accelerators in your journey? I'm on a few boards of accelerators, and clearly from our side, we think we're super valuable, but from the, for entrepreneur side, how valuable are they?
Incredibly.
And then my second question is, when you're engaging with angels, do you let them know that typically there's a second and a third round, and that there's a dilution factor in their investment? Because I've never seen, actually probably never is too strong a word, somebody who only needed 1 round and then they went, right? And from an investor side, what I'd like to see, especially when you start investing early venture, is 30 to 35 CAGR on the return in a 7 to 10 year time horizon. So is that part of the conversation? Because like you said, whoever is expecting something in 3 years should not invest in venture. They're going to be very disappointed. So accelerators, and then do you tell the story of a multiple investment horizon?
So yeah, accelerators are incredibly helpful. I think I would definitely invest in founders that come out of an accelerator program that it's very well known. To your second question is, if I let investors know that they're going to be diluted, and I think at least from my experience, most of the investors I meet are seasoned investors, so they know. They're like, I don't take my time to let them know that they're gonna be diluted. There comes questions to what's the cap? For example, right now, we don't have a cap. We have an investment where our angels invested on a safe note with a 20% discount, no cap, and they all know what that means. So I think if you approach an investor that it's not knowledgeable enough, beware of that investor, because you don't want to have somebody who's investing and doesn't know the name of the game, right?
Interesting. I don't know if any of you want to complement that.
Yeah, I think now that I'm in venture capital and also as a founder, there's a lot of lack of information, lack of education. So yeah, I had angels that have no idea what is a safe, and you need to explain them, and dilution. In my case, I didn't explain maybe enough. So then it's appear what's going on, right? So and I have seen it a lot, and also in the founders. I think the founders have no idea how venture capital works. So I raised 5, 6, 7 rounds, maybe 20 million, and I thought I knew how the venture capital works. And now that I'm doing venture capital, I had no idea. So I always imagine like sitting here, like, okay, we're going to give you money, it's fun, right? But you need to raise money as well. You have your LPs, you have return, Felipe, and you know, right?
Yeah.
And Francisco know now. So I think there's a lack of education information on both sides.
And I think that's exactly why it's important acceleration programs. Let's make both
Yeah.
investors and startups come together.
For me, accelerators could be good depending on the company. Like I sent my kids to a private school and they didn't take advantage of it. So I sort of wasted my money because the school was good. They didn't do everything they were supposed to, they could do there. Right? So this is the same. Go to an accelerator, you don't do networking. You ask ChatGPT to make your decks. You don't learn anything, right? So then investing just because they went to an accelerator, I think it's a good sign, but it's nothing that proves that they are really good.
Right.
Thank you. Thank you.
Yeah,
It
it's
is.
high.
Yeah.
And it has to be. But
Well,
we are. Yeah.
No, in my case, I joined Endeavor too late, meaning that we were having a lot of traction and they came to us, Laura at the time, because it was really good for them to have our company in their portfolio. So when I went to the ISP and I said, "Oh, why do you join Endeavor?" I had to lie, right? Because everything that they wanted to listen is not what I wanted to say, but I wanted to get okay, I did it. That's the last time I lied in my life. And now this is the
Call the wife.
But something really interesting that happened to me at the time that we were talking to the board about hiring a bank to do the M&A process. This is the most, the highest single value I got for Endeavor. I talked to one of their very seasoned people that I sort of became close to, and he was a private equity guy. He gave me amazing advice. So that actually was worthwhile our Endeavor journey. Then I ended up being in the board and a mentor and an entrepreneur. So it could be good if you take advantage of it.
Definitely. I think we're on top of the hour. John, you can make the questions afterwards. But like, first of all, I want to thank Orit, Felipe, and Eyal. Really insightful, I think, for all the angels here. We have explored not only the ways that the angels cannot value, but how you have to think about investments in the future. So with that said, thank you. Thank you, everyone.